Do you need the solve illustrations of CA inter syllabus? So please subscribe to my channel and click the bell icon and you will get that. Illustration 5. Mrs. X has two departments A and B. From the following particulars, prepare the consolidated trading account and departmental trading account for the year ending 31st December 2011. Opening stock at cost, purchases, sales, wages, carriage, closing stock in that purchased goods, finished goods, purchased goods transferred by B to A, by A to B, finished goods transferred by A to B and B to A. Return of finished goods by A to B, B to A. You are informed that the purchased goods have been transferred mutually at their respective department purchase cost and finished goods at departmental market price, and that 20% of the finished goods at each department represents the finished goods received from the other department. So in this question, they have asked us to prepare the departmental trading account, that to consolidated trading account and departmental trading account. So this trading account, departmental trading account, we will prepare. Then after that, what they have told is 20% of the finished stock at each department represents the goods received from the other department. So 20% of the closing stock is from the other department's goods. Okay, so that is sent at the, that is transferred at the market price. Okay, that is transferred at the market price, and we don't know that what is the percentage of profit they have transferred it to the other departments. That's why we'll first prepare the departmental trading account. So after preparing departmental trading account, we'll get the gross profit. From the gross profit, we'll find out what is the percentage of profit which is transferred in that closing stock to other department. Then we will find out the stock reserve and we'll find out the consolidated financial statements. This is the overview of the question. Now we'll start doing. So prepare a format like this. Mrs. X departmental trading account for the year ending 31st March 2011. This is debit and this is credit. So the first thing they have given is opening stock at cost. So consisting of purchased goods. Okay, this is at cost, so no worries, just write down these in the opening stock. To opening stock, it is 20,000 and 12,000. Done. Next one is purchases, write down 92 and 68. To purchases, 92,000, 68,000. The next is sales, 140 and 112. So write down here buy sales 140 and 112. Done. The next one is wages. Wages is 12 and 8. Wages 12,000 and 8,000. Next is carriage, and we have to consider it as a carriage inwards because we are preparing only departmental trading account, and if you need you can give the note for it. As it is of the departmental trading account, it is already assumed that carriage is carriage inward, and write these. To carriage 2,000 and 2,000. Before writing this closing stock, we are having some transfers, so we have to record that first, and then after that only we have to record the closing stock. Now every student get confused here as to how to write all these. I'll tell a simple trick, you can follow this. See, this is purchased goods, yes or no? The simple trick is, to whom it is going, to A it is going, yes or no? So to A you have to write it as 10,000 in the debit side. If you are writing in the debit side, to whom it is going, A, so go and write in the A column. By whom it is going, go to credit side. By whom it is going, by B, so write it in the B column. That's all is this. To transfer of purchased goods to whom it is going? A. To A it is going 10,000. Next, by transfer of goods from whom it is being sent, by whom it is sent. So B, write 10,000 here. That's all. Okay. Next, by A it is going, by A 8,000 is going to B. We'll record it. See, by A transfer of goods is 8,000. Record here. Same the reverse. To whom it is going? B. That's all. To and by is the crux for this. Okay, you have to remember this. Just a simple trick. Same thing appears to here. By whom it is going? The finished goods is going by A to B. So okay, we'll record by A. By transfer of finished goods. So by A it is going. So 35,000. Here to transfer of finished goods to B it is going. So write it in B column. The next finished goods is from B it is going to A. So by B 40. By transfer of finished goods by B it is 40,000. To A it is going, to transfer of finished goods to A it is 40,000. Same thing applies to everyone, whether everything, whether it is return of goods or transfer of goods, from whom it is going to whom it is going. That's all. So by A 10,000 is going to B. By return of finished goods, okay, by A it is going. So by A is 10,000. To whom it is going? To return of finished goods, it is going to B. So record in the B column. Same thing. By B to A 7,000 is going. So by B 7,000 to A 7,000. 7,000. Okay. Now all the recordings are done. Write down the closing stock. So by closing stock. So closing stock consists of purchased goods and finished goods. Mention these and write these now. 4, 500, 6,000. Purchased goods 4, 500 and 6,000. The second one is finished goods 24,000 and 14,000. Now make the total and we'll see whether it is a gross profit or gross loss. So I've got the total highest on the credit side. So the total is 2,21,500 and 1,89,000. So and now it is the gross profit. To gross profit balancing figure. So I got the balance for this is, for the B is 46,000, and for the A I got is 38,500. So now we got the profit of the gross profit of the each department. Keeping this, we'll value the closing stocks profit. We have the gross profit. Now we should have sales. So to find out sales, they have told that the goods have been transferred mutually. Yes, we know the goods have been transferred mutually, but at what is the value of the goods that which has been transferred? Like we have made some transfers between each other and returns between each other. So what was our sale before transferring all such things or before returning? So now we'll find out that. So this is a working note for that, for calculating. Working note 1. Now we are having sales of each department. Okay, department A is 1,40,000 and department B is 1,12,000. Yes, we have made some transfers. So take back those transfers. Transfer means you have given it, so you will deduct it. Again, you are getting back is you have to add it. So add back the transfers. But be careful, they have said that they have transferred the departmental purchased goods and finished goods. So purchased goods is being sent at the cost itself, purchase cost itself. Only the finished goods it is being sent at the price which is more than the cost. So we are considering only the finished goods transfers because it is consisting of the profit margin. So finished goods from A to B it is 35,000. Okay. Um, by A it has gone to B. So A should take back that. So add 35,000 for A. A add 35,000. Okay. Now for B also. Okay. B has transferred to A. So take back. So B has to take back that goods 40,000. So add back to B 40,000. So this comes to 5,007, 1,75,000 and 1,52,000. They have also returned some of the finished goods. So, so in this transfer only they have returned some of the portion. So you have to deduct that. So they are sending back this 10,000 to B. So deduct this to B. Now who is getting back the goods? B is getting back the goods. So add 10,000 to B. Sorry, deduct 10,000 to B. Who is getting back the goods? B is getting back the goods. So add this 10,000 to B. Who is getting back the goods? B is getting back the goods. So deduct this from B. So less returns. So deduct 10,000 from B. Then B is giving to whom? A. So deduct 7,000 from A. 7,000. So it is 1,68,000. 1,42,000. So we got the sales value which they had initially, sales plus transfers. Before transferring they are having the stock, and for the sale which they had, so that stock, both the stocks they were having, both the values they are having. Now we got this sale value of each thing. So now we'll find out the gross profit for each department, gross profit percentage. So GP percentage is equal to gross profit divided by sales into 100. So what is the gross profit which you have found out in the trading account for A? It is 38,500. So 38,500 divided by 168,100 into 100. So what is the gross profit for B? It is 46,000. So 46,000 divided by the sales, 1,42,000 into 100. So what is the gross profit percentages? 22.92 percentage, and for this 32.39 percentage. Now 20% of the finished stock is the closing value, which is 20% of the finished goods of the closing stock is representing the is being it represents the 20% of the finished stock of the closing one is representing the goods received from the other department. So the 20% of the goods of other department is being hidden in the finished stock. So we'll take out that. So 24,000 is the finished stock. So for A, the 20% is 4,800 for A. So closing stock is 4,800. For B it is 14,000 into 20%, 2,800. So for B it is 2,800. Now this percentage of closing stock is representing the other departments. So this closing stock has been transferred, yes or no, but it is representing the other department stock. So they have with how much of profit margin have they transferred to this, have they transferred to us? So to know that, 4,800 into other department's profit, gross profit, 32.39. Same thing applies to this also. So this one for B, 2,800 into gross profit of the other departments, 22.92 percentage. So this comes to 641, and this comes to 1,555. So this is the profit percentage which is hidden in our closing stock. Now we'll take this as a total. Okay, we'll take this as a total and we'll transfer to stock reserve, because this is the profit which is included in the closing stock. So the total of this is 2196. Now we'll prepare the consolidated trading account. So Mrs. X Limited consolidated trading account for the year ended 31st December 2011. Particulars rupees debit and credit. Now same thing what you have did in the trading account, take the total, combine the total 20, here it is 20,000 plus 12,000, add this and write down. That's all. But don't write all these transfers, because we have considered this transfers in this only. To opening stock, it is 32,000. To purchases, 1,60,000. To wages, 20,000. To carriage, 4,000. By sales, 2,52,000. By closing stock, purchased goods and finished goods, 10,500, 38,000. And the stock reserve which we have found out here, to stock reserve is 2196. So make the total. The total comes to 3 lakh 500 and 3 lakh 500. So you get the profit here. So to gross profit brought down, balancing figure is 82,304. So that's all is the question. I have also posted some of the accounting and costing illustrations which is solved. So please go and check that. And if you like my channel, please subscribe to the channel and click the bell icon for more videos. Also comment in the comment section for any query.